Hello and welcome to the ADM Investor Services weekly market kickoff. Please note that the views and expressions here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's panelists are Alan Bush, our senior financial economist, and Mark Soderberg, our senior ag market specialist. Let's start with Mark. Mark, what is your expectations for today's crop progress report?
Well, I suspect corn plantings really shot up last week. I'm guessing over half of the country's crop is now planted, so somewhere in the 50 to 55% range. This versus the historical average of about 42%. Soybean plantings also likely to remain well ahead of their normal pace. I'm expecting probably in that 35 to 40% of this year's crop planted. Historical average is right around 20%. Spring wheat plantings probably reached about a third done. This is still below the historical average. I think good progress was made last week as temperatures warmed up, but we did have some rains in some areas of the northern plains, which likely restricted progress in these areas. And I also look for some additional improvement in winter wheat crop conditions as well. Probably look for another 2 to 4% increase in the good to excellent following last week's rains.
Okay. And what's your expectations for old crop supply demand in Friday's USDA report?
I see very little change in old crop ending stocks for corn, soybeans, and wheat. If you recall back in the March 1st stocks report, ending stocks for both corn and soybeans came in below expectations, suggesting either strong domestic usage or last year's production being lower than what the USDA had estimated. So the USDA made absolutely no changes for this in the April WASDE report. So in this month's report in corn, both exports and corn use in the production of ethanol have been running below the pace we need to see it at to reach the current USDA forecast. So I'm looking for about a 25 million bushel reduction in both of these categories. This to be offset by about a 50 million bushel increase in feed usage. So as a result, ending stocks will be about the same at 1.342 billion bushels. Similar story in the soybeans with both crush and exports, about 15 million bushel reduction in both of these. I think that's going to be offset by a 30 million bushel increase in the residual category, and that would keep ending stocks unchanged at 210 million bushels, historically very tight. No changes in wheat. If we did see any change, I think by just a very modest 5 to 10 million bushel reduction on the exports.
All right. So, what would your outlook be for a new crop production in Friday's report?
Yeah, so in both corn and soybeans, the USDA will provide their first look at the new crop balance sheet since the March 31st acreage data. With corn acres coming in at just under 92 million, they've plugged in a 181.5 bushel per acre trendline yield. That would put production at a record at 15.25 billion. Under that scenario, ending stocks are likely surge to over 2 million bushels. In soybeans with acres at 87.5 million. Trendline yield here has been plugged in at 52 bushels an acre. Production will also work out to be a record at just over 4.5 billion bushels, and that would likely see ending stocks build in that 325 to 350 million bushels. So USDA is likely to keep the bar pretty high, or start off the bar pretty high for both corn and soybean production. Now it's up to Mother Nature whether this will be reality or not. In wheat, I got the winter wheat production at 1.275 billion with an average yield of 45.1. This is above the year ago production of 1.1 billion. However, the yield is below last year, the difference being the higher acres being planted this year.
All right. Thanks, Mark. Moving over to the financials. Alan, what are the most important economic reports scheduled for this week?
Okay, we really don't have that many, but those that we do have are quite often reports that move markets quite a bit. So the first one with that potential market impact would be Wednesday with the April Consumer Price Index guessed at up 0.4%. Thursday, we'll have the April Producer Price Index anticipated to be up 0.3%. And then Friday, we'll have the May Consumer Sentiment Index anticipated to be 63.
Okay, and what is the price outlook for the industrial commodities?
So in light of the weakening global economy, I think lower prices are likely across the board for the industrial commodities. The technicals are also providing bearish signals. We had crude oil recently falling to its lowest level since December of 2021, although there has been a bit of a bounce today. Last week, we had lumber falling to under a double bottom pattern and it to its lowest level since March. So I expect all of the industrial commodities to continue to come under selling pressure, and that would include crude oil, natural gas, copper, and lumber. So basically, I'm looking for lower across the board for the industrial commodities.
And lastly, Alan, what is the outlook for the US dollar and the euro currency?
Okay, so it looks like the US dollar will continue to weaken since the Fed may not be able to hike interest rates with its Fed funds rate at 5 to 5.25. So I think we are likely to see the Fed on pause for a while, probably for the next two meetings, while at the same time, the European Central Bank will probably raise one or two more times. Also, the technicals still very much negative for the dollar and still very positive for the euro currency. So looking at interest rate differential expectations, I think the dollar will probably continue to weaken, and I think the dollar will weaken to a point surpassing recent lows. In the euro currency, I think will probably continue to advance. So be long the euro currency and be short the dollar index.
Well, thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or ADM. If you would like more information about our brokerage services, please visit admis.com. Thank you.